Hey, my name's Dave Nicholson and welcome to my YouTube channel. A major central bank has cut interest rates today. Now, this is important to follow along because we'll always be talking about what is happening in the market, and in other areas of the world, if they cut rates, it can increase the probability of the Bank of England following and cutting rates. So I'm going to talk about who's cut their rates, how much they've cut it by, and what that means for us as UK investors and homeowners alike. Now, before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit that bell notification. We've got new content every single day on the channel about house prices, investing, and much, much more. And one more favour, smash like or tickle like over there. That really helps me with the YouTube algorithm. It gets more views on the content and helps the channel grow. So take a moment and smash that like button. So what's been happening today? Well, the European Central Bank, the ECB, have cut rates. And they are cutting rates significantly faster than the Bank of England, although there's still time for us to catch up. Now, this is the third cut they have had this year. Think about that. Like, that makes a big, big difference. And their inflation is there or thereabouts similar to what we have right now. So the European Central Bank has cut their rate from 3.5% down to 3.25%. Wouldn't it be nice if the Bank of England was at that level right now, rather than at 5%, still that we're at. They've acted a lot swifter in Europe, and it's because they feel there is a downturn on the way. That if they have a downturn, potentially that could leak over into our economy as well. So this is the third cut that they've had in 2024, which is really moving in the right direction for Europeans to be able to borrow money and get mortgages cheaper. Now, European inflation is actually higher than ours. And so their inflation at the moment is sitting at 1.8%. So it's actually higher than ours, but it's below the 2% target. And that's where all central banks are trying to get inflation below that 2% target. Now, the Canadians are probably going to cut rates as well because they are below the 2% target. So literally everyone that's below the 2% target is looking at cutting. Now, the Bank of England, the markets are forecasting what's going to happen. Are they going to cut rates on November the 7th? The probability of that at the moment sits at 90%, but things can change. Right, lots of things can change prior to that. There could be some sort of black swan event or something like that. That means they cut even more, potentially. So the Europeans have got their inflation under control, but they're forecasting the same as the Bank of England. So the Europeans are saying that they feel that the inflation rate will go up next month and in December due to energy prices. But as I've seen covering this channel for 2 years now, these central banks could be massively wrong. At this point, the Bank of England was forecasting our inflation would be back up to 2.7%, but we're at 1.7%. So there's a big, big difference there. Now, energy costs have risen, but oil costs have also come down more recently, because China is not using as much energy at the moment. There's some big problems brewing in China at the moment. They're not outputting as much in their manufacturing, and that potentially, they don't give the most accurate figures, I would say, but China could quite easily go into deflation. And what that could mean for us, could be worrying, is they could flood us with very cheap goods. That would mean our manufacturers would struggle in that scenario. And you don't want to get into deflation. I know a lot of people on the channel that watch and put comments on the channel will say, well, prices aren't getting cheaper. You don't actually want things to go backwards. You want your wages to catch up. That's the better scenario, because if we go into deflation, a lot of companies will cut staff and will go into a recession off the back of that, which isn't Great. So what else is going on? The GDP, the gross domestic product that the Europeans are expecting. So the GDP in 2025 over in Europe is actually being revised down. So this is for 2025. It was expected to be 0.9%. It's been revised down to 0.8%. That's low, and that easily could turn into a recession. You just need one or two bad quarters, and that really could start to steamroll then. Some bad news over there could mean that Europe could easily go into recession, and that's what they're worried about, and that's why they're cutting rates in order to stimulate the European economies and get things moving again, and hopefully get that GDP figure back above 1% or closer to 2% is where they'd more likely have that. And so they forecast that there is weakening growth in Europe. It's not looking as positive as it has been. Unemployment is rising. These are things that we also have. And so the Bank of England will be looking at this data. They will look at the Canadian data. Probably they're not too worried about over there. But the European Union is obviously bigger as a whole collective than the UK is. And so we will be looking at this data. We will be looking at the fact that they've cut 3 times and we've cut once. But a lot of this and our interest rates is going to be down to what happens with the Federal Reserve. And so the Federal Reserve has cut by 0.5%. They did it before the election. That was potentially by some seen as political, particularly Donald Trump wasn't massively pleased about that. But the next meeting for the Federal Reserve is after their election. So the election is on November the 5th and the meeting is on November the 6th, the day before the Bank of England meeting. So that gives the Bank of England some time to follow the Fed. If the Federal Reserve cut 0.5%, that means that we could potentially cut 0.5% because they will have cut 1% at that point and we will have cut 1/4. And so we normally mirror them to keep our currencies at fairly even levels. So the Bank of England job, I think, is actually easier than the Fed. You just look at what they do and do something similar. That's how I see it anyway. You might not agree with that. But look, this is good news on the whole. The fact that other areas are cutting rates will put more pressure on the Bank of England to cut rates. It improves the likelihood of a rate cut. But also, you've got to look at all the other things that they're talking about. The fact that they're seeing the Eurozone as weakening does mean that potentially our economy is likely to weaken as well in 2025, because look, we're trading partners. If their economy is weaker, they're likely to import less from us, and that won't be great for us at all. So let me know your thoughts on this cut by the European Central Bank. Do you think it makes any impact even on the Bank of England decision next month? Where do you think we're going to end up? Let me know in the your thoughts in the in the comments below. Do smash like, do subscribe, and check out all the other content on my channel, including this video right here.